Hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. I'm going to get you folks what you need to know before you go, and that starts out with the economic data, see how that impacts the overall markets with some market analysis, maybe sprinkle in some geopolitical fodder to round off that analysis. And finally, we'll wrap it up with some option strategies that I'm looking at to implement into my portfolio based on these assumptions we come up with in the market analysis. All right, so let's get on with the economic data. What do we got going on today, this week? Pretty light, to be quite honest. Last week was a pretty busy week in terms of economic data, but the thing that we're going to be all looking for is, at least real traders or economists, I would say even, is the beige book, which comes out tomorrow along with crude oil inventories. The beige book, though, is an economic gauge of the overall economy. Now, why do I like to look at this one? Well, because the Fed looks at a very similar economic data point, and it's called the blue book. It comes out right before their FOMC meeting, so they get a kind of a freshen up version of the beige book, but it's still going to give us a pretty good idea as of what's going on. Also, we have existing home sales, building permits, and everything else going on this week. Actually, today is the building permits and housing starts. That came in better than expected. One of the things we were talking about here is, are the home builders going to still be confident moving forward with the higher prices of all of the raw goods that go into building a house, from metals to polypropylene? Well, they don't seem to be shrugging away at all with the higher prices, with the building permits coming in higher than expected and the start. So they're continuing to look forward and expecting to start expecting that this boom in the housing market is going to continue, because we saw yesterday in the NAHB, National Association of Home Builders Index, coming in line with expectations there. And we get some flash estimates coming out of Europe on Friday for the PMI numbers, Purchasing Managers Index. Those are forward looking. So we like to look at those because it is a good gauge of what is expected going forward. The purchasing managers see demand coming in, and we get a glimpse at what they are looking at there. Sorry, dogs going a little bit nuts this morning. All right, let's share the screen and get on with this analysis with crude oil. We got crude oil coming off, as a matter of fact, making a nice topping pattern with a confirmation. I'm finally starting to believe, with these lower highs and lower lows, that we're starting to see crude oil fall over. So hopefully we can see the 90s or at least even 80s coming forward. I don't want to see hundreds anymore, because that is going to definitely start slowing the economy down, as folks aren't able to create velocity of money. When we're spending all this money in gas, well, you don't spend that $5 elsewhere. When that $5 isn't being spent elsewhere in the economy, it slows velocity of money. 80% of our dollars are spent within the community around us. So think about it. If you take 5-10% out of what we're spending there and it throws it into gasoline, well, then the rest of your economy is going to start struggling there. So finally, good to see that crude oil is starting to roll over. Now, bonds, on the other hand, not going to make any type of move to the upside. If we do see a move to the upside, that's going to be an opportunity to look at doing some covered calls, lower overall basis on our bond portfolio. It's not a direct correlation. I show you how to kind of manage that type of strategy in your portfolio, because your bond portfolio is usually filled with maybe state municipal bonds, things like that are very difficult. You can't find options on specific bonds for a government. But what we can do is take the overarching, maybe TLT or something like that, and start using that type of product to lower overall cost basis on those things we have in our portfolio. All right. So bonds, any type of rip to the upside, I would be looking to sell into that. Gold futures, I'm expecting gold futures to continue to move higher. We are seeing that this inflationary aspect everybody was talking about that was going to be transitory, not so much. We're seeing wage inflation. We're seeing price inflation outside of food and energy, where those are going to be more sticky inflationary aspects of the pricing wars that we're seeing. Bitcoin, right there at the point of control. One of the things we were seeing out of NVIDIA is that they're seeing lackluster sales at best, and most of that's going to have to do with the fact that miners aren't too keen on jumping into that game right now. VIX coming off as we're seeing equities really start to calm down. Now, a lot of things, if you're watching TV, they're not really saying they're calming down, but we've been talking about this for quite some time, folks. We've been jacking around. We're going to see intraday volatility, but at the end of all of it, we're going to be right there back at the point of control, which is right where the Dow Jones Industrial Average has managed to climb its way back to. Now, NASDAQ, we were talking about, it was overextended to the upside, so we could easily see this get overextended to the downside, which is what has happened. Now we're toggling on this Fibonacci support level. I'm expecting us to start seeing a little bit more buoyancy here in the NASDAQ. It's a little bit trepidatious right now, but with a lot of this mask mandate, one of the things that I forgot to mention was the mask mandate getting lifted. Folks were mid-flight and they were getting their announcements that the mask mandate was lifted and able to remove those, setting off a lot of cheers. Well, throughout the community here in the United States and probably globally, folks are starting to feel like it is safe to go back out. So what is the risk here? Well, risk assessment for me, not so much in the tech sector to the upside, but if we are looking at some of those the reopening, if you will, still that type of trade where travel and leisure could definitely start getting a little bit of a bump here starting with the airlines. I don't know how long it'll last here, folks, but I think that there is risk to the upside in any of these travel and leisure, at least for the short term, and maybe getting a good opportunity at these levels to add something to your portfolio for the longer duration. But I would stay away from the tech sector right now as it's still a little bit iffy. I would still be looking to put my money in the blue chips right now, look to lower overall cost basis by selling covered calls against that and things of that nature. If I'm getting into tech, it's probably going to be housed in the E-mini S&Ps for the most part, not some of the high flyer tech names that we're normally accustomed to. And we can see we've gotten the mask mandate lifted, and that has been the catalyst to get us to move higher here. Now, you guys have heard me talk probably for about 2 weeks now. We're going to need a catalyst to really get us a kick in the pants to get out of these ranges that we're stuck in here with the equities. And I just don't think that the lifting of the mask mandate is necessarily the catalyst to get us rocking and rolling here. But having said that, there are opportunities moving forward, especially like the travel and leisure right now with this reopening, that I think that things like United Airlines, the casinos, I've been big on the casinos. Those things are at rock bottom prices right now. Those types of places are going to be or those types of investments are going to be the ones that I think have already been beat up. So they are going to be able to be played with and have that upside potential there. So I'm looking at mostly travel and leisure. You guys know United Airlines. United Airlines we got here. Again, you can see a little bit of a bump here. American Airlines, sorry, that's American Airlines. We can go there. You can see everybody's getting a little bit of a bump. How much of a move here are we going to get after yesterday's confirmation? Most people would be looking at this as a bit of a topping pattern, but today's news is erasing that. So I would be looking to add something like this to my portfolio if I hadn't already added a lot of travel and leisure already. So I've been lowering cost basis on that over time. I might jump in with some airlines though here at these levels. I have a bit of a trading thing where I don't love trading the airlines to the upside, but I might have to jump in and break that rule. All right, that's all I got for you folks. Hope you have a great trading day. And if you can't take that, take it easy.